Good afternoon, everybody. My name is Rian van der Vyver. I'm the Chief Investment Officer for the Global Wealth Group and WealthPoint. And we are so excited to be joined by three esteemed real estate gentlemen in the form of David, Jason, and Chris. And as you know, we are here today to present our latest deal in Australia to you in the form of the Brisbane co-living redevelopment apartments. So gentlemen, thank you for your time and welcome. I just want to quickly do a brief introduction. I see Scott has also joined us. So Scott, welcome. And also to Paul, welcome. David, if I can hand over to you, or Chris or Jason, if you can just start off by giving a brief introduction to yourselves and to 6 sponsor as well.
Okay. My name is Chris Brasler. I'm going to talk to you a little bit about what co-living is today. I'll introduce David and Jason. So David is a development and project manager, and we'll be speaking with him a little bit later today from Highgate Management. Jason has founded and developed properties for many years through Ajani, a luxury residential living developer here in Australia. And myself, I've done mixed use and industrial developments in the United States, came here to Australia 15 years ago, and now focused specifically on co-living developments through 6C. What I'd like to do is talk about what co-living is. I'm going to share my screen with you. And
Chris, if you don't mind, just before you go there, yep. So just for our attendees, so 6C has been formed through a partnership between Highgate, Brasler Properties, and Ajani, as Chris has mentioned. And although 6C was fairly recently established, the gentlemen on the call, as the founding directors, have been working together on an informal JV basis since 2015. But more importantly, what is impressive, between the three of them, they've got 85 years of combined real estate experience. So, Chris, just over to you.
No problem. Okay, I'll just make sure that I can share this properly, and we should be on our way.
I will tell you if we can see.
Okay.
Chris, yes, we can see the screen. Thank you.
Okay, so co-living is, as it says here in the bottom, the hassle-free living of the future, where residents rent an upmarket, fully furnished, technologically advanced, self-contained micro apartment that is purposely built and designed around employment hubs, hospitals, education, technology parks, and much more. And specifically, we're going to dive into what does that mean? What we provide, what purpose-built co-living provides, are high standard, fully furnished micro apartments. These are in buildings that have communal spaces that people would like to go to and spend time in together. They're actively managed by a professional management company, an operator, and they're branded so that people know what they are when they get to a city or they're living somewhere. They're a well-known attribute within a community. They're designed specifically to have residents connect with each other, and they're located in public transport that's close to central business districts and close to lifestyle amenity. The basis and the underlying resident experience is driven by a platform that basically handles them from the minute they're thinking about coming to co-living to the day that they leave the facility. They are taken on an app that basically brings them in, gives them their bill. Everything that they do is on one service and one platform. And as the back of the house operator, we're using that to interact with them, whether there's a repair, whatever we need to do. If they need to complain about something, we're right there behind the app, operating that facility on a day-to-day basis. In Australia, co-living is considered commercial residential property for tax purposes. It is the fastest growing residential property sector in the world right now. As you can see from JLL, a worldwide real estate firm that has been tracking co-living for some years. They're located in key cities all over the world, where you have major growth corridors that emanate from the central business district. We at 6C are specifically looking for locations that have hospitals and universities, being able to walk to really good retail, having an express bus that can take you to the CBD or a train, and proximity to either the beach, parklands, entertainment areas, anywhere that lifestyle commitment is required. Australia has some of the highest housing prices in the world, and that is driving people to rent property. It is not something that has been in the conversation in Australia here to now, but as you can see from the Australian business statistics, a significant amount of people are driving from home ownership into the rental market. The offering includes the micro apartment that has a kitchen and ensuite. That is approximately 18 to 30 square meters. Once you walk out of your door, you can go to co-working spaces, which are on site. You could go to a communal gourmet kitchen to entertain your friends, the outdoor barbecue, a sun deck, depending on the size of the facility and where it is, it may have a pool. There are communal areas that have quiet areas so that someone can study, they can take a phone call in private. We also have activities that we provide to the residents, along with cafes, restaurants, gyms, all can be located dependent upon where that specific building is located and what the amenity is around it. We provide cleaning every 2 weeks to ensure that the residents are serviced properly. We also provide linen. We provide car and bike share on site. Demand is going up for rental. That's driving folks to different types of living environments. Co-living is specifically geared towards those that would like to be transient, to have shorter lease terms. Let's see who they are. Our typical residents are between 20 and 44 years of age. They really would like to have a little bit of flexibility in how they live somewhere. Our typical terms, they start at a 3-month minimum, and they can go as long as the resident is still paying. We sometimes call these folks digital nomads, and that is a term that is being placed on your graduates, your young professionals, your health, aged care workers. These are city dwellers. They are essential workers. We also see in Australia, with the growth of the economy, a significant amount of infrastructure trades that need a place to live for 6 months to a year, possibly 2 years to work on a project. We have tunnels, we have highways, and we have rail. We have airports all being built at the same time because of the growth of the country.
Chris, can I just interject there if you don't mind? So
Sure.
just to try and contextualize this a bit more, and I'm not sure if you're going to get to that, but for someone of the attendees that almost, I want to say, struggle with the concept of co-living, think of purpose-built student accommodation. I remember when my wife studied postgraduate, there were 4 or 5 rooms in a unit. They shared the kitchen, they shared the bathroom, but each had their own separate room, but communal areas. So this is similar to this. Or for someone of our attendees that didn't study, think of boarding houses. Same concept. And I think that was all precursors to purpose-built co-living. Is that correct, Chris?
They are. And just imagine that you've graduated from purpose-built student accommodation to purpose-built co-living. So the graduation is a step up. It's like stepping into a Mercedes compared to a Yugo. It's a completely different product from the standpoint that the privacy within your space is where your your ensuite is, your bathroom, your ablution, the cooking can take place within your private space. Your private space has plenty of natural sunlight. It is air conditioned, it is appropriately appointed, and it is fully furnished. When you step out into the corridor, you're stepping out into the equivalent of a high-end hotel space. You're not stepping into what we would consider a boarding house or a student accommodation, because those tenants are not necessarily proud of where they're living. That might not be the top of where they'd like to be. This is a location that we have seen with the existing co-living that is in the Sydney area that is full all the time with waiting lists. And that's the type of establishment we're creating.
Yeah, Chris, and I also think it's important for our potential investors in our community to understand that the Brisbane co-living property is specifically, although it is targeted at affordability, it is more on the luxury end of affordability in terms of the offering in the market. Correct.
And what we see, this is different than what we call flatmates. You may be familiar with someone takes over a multi-room apartment. It could be a 3-bed apartment. Those people are sharing a bathroom and the cooking spaces. They don't necessarily have the opportunity to choose that share apartment person, and they have to share their space with them constantly. This is a slightly different model, and I'll show you the rooms in just one moment. But first, just to tell you, the attractiveness is the affordability. If you go into a community here in Sydney or in Brisbane, you'll be able to walk into a co-living facility and you'll be 10 to 20% less for your rent. Your rent includes Wi-Fi, your rent includes your water, your utilities, everything is inclusive in that one bill. It's very convenient, and it will drive folks to these locations because our younger generations believe in the shared economy, and this product specifically leverages off of their understanding of sustainability. They would like to be here because they see the social connectivity that is provided. It is desirable because you can lock your door. It's a private space. You're there. You cannot hear the people outside of your room. And then when you would like to be with them, you just tap on the app and say, hey, I'm in this room, and it will go out to the friends that you've made within the community. You can decide, well, I just want to let John and Bob know that I'd like to be in that room. Well, you have the choice to do that with the app that we provide to them. So it's also the flexibility of the lease term. All of those are basically the lifestyle, and that's the shared economy approach. In terms of investors, just a quick comment that we put in here. DTZ, the investment group, committed £650 million in 2019 to co-living.
Jason, I just want to, Chris, I just want to just mention something about the shorter minimum length stay. You've mentioned the number, the previous slide of 3 months, just to put the community at ease. And I don't know, David, you might touch on this, but the targeted lease term is about 3 to 24 months that we're looking at. And based on your research, you're looking at an average kind of lease term of about 18 months. And
Correct.
My understanding furthermore is that there's quite a bit of long-term or a shortage of long-term residential stock in Brisbane, which means that we might even increase the lease term because longer term stays will move over to co-living because of this lack of supply in that area.
Yes, that's quite true. And just to leverage off of that point, in Australia, you do have quite strong tenancy regulations that in typical apartments are restrict folks that have to stay there for 1 year. So for tenants that are looking for a shorter term or are unable to commit, this is attractive to them. But we do see over 18 months as the typical duration of these residents. Please recognize that when they do sign in, they are paying for a full cleaning, and we do hold a bond. So it's not as if the turnover, we will know 2 to 3 weeks in advance what they're doing. We're out to the market, and we will have that space filled immediately. All right. 6C has spent a significant amount of time and dollars to work on designs that appropriately reflect what residents are looking for. We've looked at existing models, and we've hired several different architectural firms to help us design spaces that when you sit in the space, you can sit in 2 or 3 different locations and you are still dappled in natural light. You still have perspective that you can work on something in one area and the furniture is convertible to another area, so that you're not always sitting in the same place, the same exact concept. This is a square room that we see here. And in the square room, we have a privacy screen that can be drawn across the sleeping area. This area is permitted for 2 people to stay in. So a couple may decide to stay in this unit, and their private area, their ensuite and their living quarters are separate from the rest of the room. They also have a large window portal that brings in the natural light, and a full kitchen. That kitchen comes with a combination oven. It comes with a dish drawer for wash. It has a stove, as well as a sink and plenty of storage. This is our rectangular design, and different themes emanate off of this design. So while you see one design here today, we may have 6 or 7 that end up getting deployed into a specific building because they cannot all be the same. In this design, we have a vanity sink separated from the toilet facilities, and that is in response to the younger people that we have worked with, who have been putting the designs together for this location. Your wardrobe is on the right-hand side, and there is a privacy screen that can be drawn across to separate the dining area and living areas from the bed. In many of our designs, the bed also does have a viewing window to the side. The investment benefits. The quotes that you see on this page are specifically centered on the fact that if you can build more residential units in the same space that you can have larger units, you're going to get a higher investment yield out of those smaller units. This has been studied by MIT specifically for co-living spaces as how do they stack up against traditional multifamily, or in Australia we call multifamily build to rent. So the more units that you can put in, so long as those are well designed and are attractive, your yield is going to go up.
Chris, so am I right then in saying that 6C will rather focus on units that can accommodate 1 and 2 occupants instead of, let's say, 4-bedroom units that can accommodate 4 occupants? That would be potentially more optimal from a yield per square meter point of view.
Correct. It's also where the market is going. We see, and I think Jason and David will touch on this later, we see the amount of migration coming into Australia, the skilled workers. This market, which David will talk on later, it's enormous. And these people are coming as singles or as young couples, and they are going to need a place to live. So I won't go too far into it, but we see this market as a growth market and one to focus on into the future.
Thank you.
Co-living does tick the box for ESG, specifically as an attractive proposition for socially and environmentally responsible investors. We attract people not just because we've got little boxes that cost less that they can live in. We're attracting people because they want to be there. This is something that they feel socially connected with. We've got solar on the roof. That is serviced by a battery power so that it's running 24 hours a day. We have car share, we have electric car plug in. We also take all of the food scraps there, put into organic waste, into the herb gardens that are on site. Those herb gardens have a schedule and somebody has to be out there each week. If there isn't, our landscapers got to do the job. So all of the residents are committed and are focused on recycling and being a part of that program. Give you a little bit of a recap. These are the faces of the typical residents. They're excited because they're going to be in a great location that they can afford to be in. They have this thing called the carefree lifestyle. They just want one bill. They don't want 5 different utility bills that they forget about, and then they get a late charge and they don't know how to deal with it, and they can't call mommy and daddy. At the end of the day, it's as simple as it can possibly get, with a great environment in a landscaped area that they're comfortable with. I'm going to hand it over to Jason, who's going to talk a little bit more about the history of 6C, myself, David, and Jason, and take it away.
Chris, thanks so far. Well done. It's very informative and highly enjoyable. So thanks for that so far.
Hello, everybody. My name's Jason Eggleton. I'm one of the founders of 6C. I'll just quickly go over what's our organisation started. And
hold on, Jason. Scott's got a quick question.
Sorry for butting in. I just wanted to say one thing that you said yesterday in a meeting that I thought was so valuable, and that you've been talking about co-living, and you said that co-living, and please help me get the wording right here, but you said co-living is the fastest growing asset class in the world at the moment. Do you mind just touching on that a little bit before we go into 6C, because that was my biggest takeaway from yesterday.
Yeah. Scott, I think it
Jason,
was started. We started with that. I think you joined a bit late, but Chris, if there's some attendees that joined late as well, if you can just mention that again, please.
Okay, so Jones Lang LaSalle tracks the market pretty specifically. They were one of the earliest global real estate advisories to follow how many development approvals are taking place, whether it's in Britain, Germany, Spain, Brazil, on the design of co-living. And the co-living movement over the past 4 or 5 years is the fastest growing real estate sector there is. We talk about logistics and industrial, and I have a history in that, and I know that that grows fast, but it's not growing exponentially like co-living is at this time. People are realizing that when house prices are going to go up to where our children cannot afford to live in a house or buy it, they need a place to live. And so that's a significant driver for co-living.
Okay. Thank you, Chris. Hi, everyone. As I said, my name is Jason. I'll just run you through the establishment of 6C. 6C was effective as a company in 2020. As was previously stated, David, Chris, and myself have been working together since 2015. 6C mission is to develop and operate sustainable, secure, purpose-built co-living communities in locations where attractive, affordable living opportunities do not currently exist and are desired. Because of the affordable nature and the collective shared economy, we're able to produce co-living buildings in desirable locations. Highgate, Ajani, and Brasler Properties. Highgate Management has been established for 25 years, and it's predominantly one of Sydney and Australia's leading development management project management companies. Ajani, which is my company, is a purpose-built residential build-to-sell luxury accommodation developer. And Chris, as he stated earlier, has been in the industrial property management, project management, and portfolio management business for many decades. Highgate, in its 25 years, has worked for large companies, HSBC, Westpac, Swires, universities, UTS, University of Technology Sydney, and University of New South Wales. They're known for their project and development management skills. They deliver projects on time, on budget. Some of the projects that they've been involved in was the Frank Gurhey building, which is probably the most difficult building to have ever been built in Australia. Basically, it's like getting a building and crumpling it up like a piece of paper. David and his team managed that, got it done on time, on budget. And, you know, people from all around the world come and take photographs of it. It's a pretty amazing job. Also, similar to co-living, one of the projects that David managed and ran was for UTS, which was a 750-room purpose-built student accommodation. So we have the skill set to deliver large projects.
Jason, if I can just jump in. I think one of the implications, I suspect, of Highgate doing work for government in Australia is things like management systems must be externally vetted. And those management systems form key part of effective project and development management. So I don't know, David, if you just want to comment on that, please.
Yeah, look, you're quite right, Rian. All our systems and procedures are third-party accredited. We've had to go through a number of approval processes to be able to run jobs for the governments. We're if you like, accredited to do work for the federal government, for New South Wales, Queensland and Victorian governments, as well as Tasmania. So yeah, look, we actively pursue that work and do that work, as well as the development work that and private work that you see in front of you.
Thanks for that. And I think just, Jason, although you alluded to it, for our attendees, we've said that purpose-built student accommodation or co-living is the graduated version of purpose-built student accommodation. And clearly there's experience within this group and the collaboration towards co-living and purpose-built student accommodation. So it's not just an idea on paper. There's a track record and experience in delivering purpose-built student accommodation. So over back to you, Jason.
Thank you, Ram. Chris, we can go to the next slide, please. Yeah, so Brisbane Properties has been in the industrial sector for many decades, and they've built and delivered and managed hundreds of thousands of square meters of space. Myself, I've been in the development business since 1996. Predominantly, Ajani is a high-end developer of residential apartments, bespoke houses and townhouses. And we predominantly do properties in the price range of 2 million Australian dollars up to 8 or 9 million Australian dollars, all throughout Sydney. Collectively together, we've completed our first mixed-use residential development, which was in the north part of Sydney. It was a combination of retail and luxury residential apartments. We've also currently secured 2 sites we're working on, directly one in Erskineville, which has started construction, which is for 34 studio micro apartments. And we have another one in planning at the moment in DY on the Northern Beaches, which is a lifestyle suburb for 26 micro apartments with, again, the communal spaces. So what is 6C? 6C is a vertically integrated co-living business. Because of our combined skill set of management, acquisitions, development, and operations, we have this vertically integrated business where we take the land from acquisitions. Predominantly we buy off market, and we buy through our network of real estate agents that we've had decades of dealing with. Once we've secured the land, we take it through the development stage through local governments, which in Australia is probably one of the hardest stages in the process. But we have expertise skills in this. From the development stage, we enter into the construction stage, and then on completion, we enter into operations, property management, portfolio management, and asset management. We're taking and delivering properties that give the investors a development margin, and they also get the continuation of the ongoing cash flow and cash stream to give a working asset with good returns. Currently, the executive team is made up of Michelle Lee. Michelle Lee is an architect by profession. She has worked for the largest retail operator in Australia, Westfield, and was the head of design and head of placemaking. She comes on board because her skill set is helping us design the communal spaces, the co-working spaces, and the living spaces so that people feel that they're in a home and that they're in a community. Co-living isn't just real estate. It's not just, being a property manager and taking rents. We see it more of a hospitality lifestyle. So we have to come from the operations side, from a hospitality, hotel management direction. In that, we have a doyen of the industry in Australia called Larry Raffles, who has been the managing director of an international hotel chain in Australia and New South Wales and ACT. His whole working life has been in the hospitality industry. And he gives us a lot of direction and guidance on our operations side of it in the hospitality sector. David, who you'll hear from.
Sorry, if I can just interject again. So I think just to place what you've just said into context, you've mentioned previously that every 2 weeks, or Chris mentioned that every 2 weeks there's new linen. That comes from that experience, that hospitality background. Am I right in saying that?
Yes, and also it comes from a good portfolio practice as well, because we get to check on the tenants and make sure everything's running smoothly.
Of course, and that's very important, because one thing that me and my team was worried about, if you've got shorter term lease periods, then there could be higher maintenance, which could bring down the yields and so on. But clearly that every 2 weekly checkup and so on gives you a very good hold on the property. And interesting to the attendees, we're not talking about tenants, we're talking about guests when we talk about co-living and we talk 6C language. So it's just a total different model and mindset that co-living and this team bring to residential. Thanks, Jason.
David, who you'll hear from shortly, is the head of development management and project management. Chris Brasler is driving our operations sector and our platform through his extensive knowledge and use of asset management in the US. Myself, I bring together my 25 odd years of acquisitions and designing spaces for people and how people work within the space. Aaron Hatch brings a network of collaboration with agents for finding assets. He's worked for and collaborated with some of Australia's largest residential developers. And he was the head of JLL project marketing and residential for Southeast Asia. So collectively, we bring design, hospitality operations, delivery, ongoing operations, acquisitions, and asset management. So what 6C is designed for and why we've collaborated is because we have a vision, and that vision is to deliver and produce a co-living portfolio. As people have done in other sectors like purpose-built student accommodation and childcare, we see this is the largest, fastest growing asset class in the world. And we know institutions love residential, and we know that they will be coming on board as an asset acquirer for portfolio. Our initial portfolio is estimated to cost around about 250 million AUD, Australian dollars. And we expect, because of the portfolio nature, we will get a cap rate compression. Now, what that means is that the end value will go up. So with this cap rate compression, we expect the end value will be in excess of 315, 320 million, which is a 70 million development profit. And along with that development profit, you also have the benefit of having a cash flow. So you have a cash flow asset that on the rent horizon of a sale delivers you a development profit. When we identify properties, as Chris has alluded to before, we look at 4 major drivers. Transport to the CBD. Work, education, and health. Retail and lifestyle experiences, be that sports, outdoor, lifestyle of surfing, hiking, and then also inner city lifestyle of restaurants, cafes, clubs. These are the drivers for co-living. So 6C is partnership with Kensington Mortgages for Chermside. What we bring to the party is our extensive years of property knowledge, our ability to operate, ability to market. Highgate management is there to make sure it's delivered on time, on budget, and with great vision. And we welcome our partnership with Wealth Migrate and our equity investors to deliver a fantastic product that will probably be regarded in the industry as one of the best. What I'd like to do now is hand over to David, unless there's any other questions, who will go through the asset itself.
Jason, before I hand over to David, if I can just play devil's advocate for a minute, due to full transparency to our community. We're sitting in 6C with a team, a core team of 6 people, and you're talking about a vertically integrated offering. So can you just comment in terms of the depth or the reach of that team of 6 people in delivering a project or a property of Brisbane's nature, please?
Okay, so the 6 people is first the executive team, right? So it's not the whole team. Highgate management has and does continually deliver multiple properties and development management, project management, multiple properties at one time. They're a development management firm. If they only worked on one job, they wouldn't have been around for 25 years. So behind David is a team of people. Yeah.
Excellent.
Okay. So again, with ourselves, Larry is the head of operations, but behind Larry is a team of people. Now, of course, this is scalable. At the moment, the team isn't as large, but when we get to the portfolio size of 8, 10, 20 properties, the team expands. You know, my previous life before we were in development is I used to have real estate businesses in Sydney. We had a team of about 30 people. We ran about 600 properties. Now, different to co-living, that's 600 owners, right? It's like herding cats. 600 owners, 600 tenants, you know, very different to having just one ownership base and a well-managed. But our property managers run the accountancy side and the management side of the business. Our hosts run the operational side of the business. So they're the interface with the app, they're the interface with the residents, they're the ones that are driving the community and the lifestyle. And then we have the property management team behind that runs the accounts, the maintenance, you know, the ongoing asset management.
So will it also be a fair comment to make that since 6C is basically a marriage between the 3 businesses, that you can also call on the infrastructure and the resources in those 3 businesses, as you've alluded to, Highgate management?
Yes.
So thank you for that.
Rian, I'd just like to open a little bit of why the vertical integration really makes sense for the investor and for us. We've seen other models with similar property profiles fail because the alignment of interest was not there. If you develop this and you're trying to get out on the cheap and sell it right at the end of its, before it's stabilized, you're going to build cheap. If you know that you're going to own this for a few years and you're floating it out to the market to the smartest guys in the room, which are those equity investment groups, you need to provide a good product and you need to have good operators that understand how to run it as it is, like a hospitality business. You're going to squeeze it to really provide the best experience for the residences so that you create a name brand. Once that name brand is out there, that's where the highest return is going to take place. If those parts are not interlinked, they're completely working against each other.
Excellent, thank you.
I think, Chris, bring that, if you note that in Australia this year, the largest purpose-built student accommodation portfolio settled, which was the beginning of this year. That was bought by Scape, which is, within Europe and Australia. That was bought off Urban Nest. So they had amassed a portfolio of properties, developed them, had the management structure in place. It was all vertically integrated. And they achieved an incredible compressed cap rate for the sale of that asset. It was generating 94 million in revenue, and it sold over $2 billion on a sub-4 cap rate. Yeah. So having a vertically integrated business definitely helps on the end strategy.
For sure, that makes a lot of sense. So thanks for clarifying that, and yeah, thanks that we could ask this question openly. David, so over to you to focus on the deal.
Righto. So thanks, Rian, and thanks, Jason and Chris, for leading in. Just let me get started. Righto. So 46 to 50 Latham Street, Chermside. Everybody can see that?
Yes, thank you. It's visible. Thanks, David.
Yeah. Perfect. So I'll be presenting on a high-level overview of the project, which is obviously, it's a purpose-built co-living development, and it's in Chermside, Queensland, and in Australia. The project location, Brisbane. On top of winning the rights to host the 2032 Olympic Games, Brisbane is currently the fastest growing capital city in Australia. The current population growth rate of 1.9% is forecasted to increase well into the future. The Brisbane City Council plan, which Chermside falls under, encompasses increased high density planning, significant investment commitments to infrastructure, school care, and schools to accommodate the expected demand. The Latham Street site benefits from significant state and local government and private investments to meet these demographic trends within the immediate community centred around health services, which I'll elaborate more on in a sec. So Chermside itself is 10 kilometres to the Brisbane CBD. You can see on this map here, it's 10 kilometres. It's actually 13.6 kilometres by road to the airport. If you went by as the crow flies, it's a lot closer. And it's 10 kilometres to Moreton Bay, which is obviously a recreational location to get away to. The bird's eye view. This is looking back from Prince Charles Hospital, which is the largest hospital in Queensland. It's literally 400 metres to the site in Latham Street. And another 300 metres in the other direction, you've actually got the largest Westfield shopping centre in Australia. And all that is, we're actually just about 9.5 k's to Brisbane CBD. So the locality and the surrounds, Chermside is an established subject, and is an established suburb of Brisbane, and it sits 9 kilometres north of the CBD. It's a key destination along Brisbane's northern transport busways, and with buses actually at the end of the street. Within 400 metres of the site, you've got Prince Charles Hospital, you've got Chermside Day Hospital, you've got North Side St Vincent Day Hospital, and Westfield Shopping Centre, as I've mentioned. You've also got Queensland University of Technology. Also within walking distance to a number of secondary, primary and infant schools, sporting fields and recreational facilities. Hospital
David,
precinct expansion.
can I just ask, apologies, you've said that Brisbane or Chermside is quite an established suburb within Brisbane. But am I right to say, if you look at the type of developments that's happening across and next to the property in Latham Street, that there's quite a bit of gentrification or upliftment happening in that area? If you can just potentially comment on that, please.
Yeah, look, there's a lot of repositioning going on. The Brisbane City Council, who obviously puts in place the control plans, have a, the Brisbane City, they've basically got a substantial increase in density plan for the area. And the reason for that is it's on the major transport link between the Sunshine Coast and Brisbane. So it places itself very well that way. It also has this hospital precinct that needs to be serviced. And as I'm about to go through, that hospital precinct is going to double in size over the next by 2030. And that 2030 is only 8 years away. So at the moment, it's the largest hospital in Queensland. There's 630 acute beds, employing some 3,500 staff and treating 420,000 patients each year. On top of that, you've got the University of Queensland Northside Clinic, Clinical School, which is teaching 135 third and fourth year medical students every year. You've got St Vincent's Private Hospital Northside, which is a 250-bed private hospital, 1,134 staff treating 35,000 patients a year. Chermside Medical Complex, which is an outpatient specialist facility, cancer centre, and various specialist suites. Chermside Day Hospital, it's a private day hospital. Over 8,000 patients undergo surgery annually. Queensland Institute of Technology, students, international experts, surgeons, and veterinary scientists attend this part of the Institute of Technology in Queensland. The development, as I've mentioned, is currently underway. So it's not just planned, it is actually underway to double the size of the hospital by 2030. So all you got to do is just look at those numbers. 3,500 current staff, we're talking 7,000 staff. 420,000 patients, that's going up somewhere 800,000 patients. So the project business case. Now, just to walk you through where a bit of background to where we've come from and the reason why, how things are moving forward the way they're moving forward. Highgate was commissioned by Wealth Migrate to have a look at the site and undertake a due diligence commercial audit. We've done that in two parts. The first part was a preliminary audit, which was, if you like, to look at the rough and dirty, so to speak, which was completed in December 2019. On the back of that and the findings of that, all the assumptions were then taken through to be confirmed, and that was undertaken through a detailed commercial audit, which we refer to in this as the business case. So if you like, it's been a review and confirmation of the highest and best use for the site, and it's provided a robust business case and confirms the veracity of the proposed development. So we've ended up at co-living. So how did we get here? In summary, earlier in 2019, Highgate, we had a role with a very large community housing provider. As part of that, that involved us putting if you like, a business plan together for them for an expansion of their housing portfolio from 1,200 dwellings up to 2,400, and they had a specific period of time that they wanted to do that in. In our review of options, we actually recognised that the opportunity that co-living provides as a more affordable housing product is very worthwhile pursuing. Highgate Highgate's also been involved with a number of purpose-built student accommodation and boarding house projects. So when Highgate was commissioned in September 2019 by Wealth Migrate to look at the highest and best use for the property at Latham Street, we included co-living, that is along with aged care, short-term and long-term residential leasing, and sale to market. Once we completed the preliminary due diligence review, co-living provided a clear advantage over the other forms of development for reasons that Chris has run you through a little bit earlier. This was further backed up in July 2020 by a company called Migrate. They are experts in the area of demographics and economics, and their report supported co-living over the other alternate uses. Highgate's business case report, which we completed in June of this year, further reinforced co-living as the highest and best use for the site and a viable form of development. So the overview and findings of the business case. From the commercial assessment report, the proposed purpose-built co-living development provides the highest and best use and most viable option for the redevelopment of the site. It is bankable, is supported by independent economists, Macroplan and Urbis. And just to take a step back from that, to undertake the detailed business case, we employed a number of experts who I'll outline here that are recognised as industry leaders in their respective professions that have contributed to the business plan and to the reports around the business plan that we've then drawn on. So they have included the independent economists of Macroplan and Urbis, the yields as defined through DKO's concept design. DKO are architects, they're actually an award-winning architect. Construction cost forecast through Mitchell Branchman quantity surveyors. They're a nationally recognised quantity surveyor who are on all the bank panels. And also we had market coverage from Paladin Projects, who are a Queensland builder that actually constructed the property next door to the one that we're proposing. We've had a valuation completed by Urbis, Brisbane, and also the design and what is being proposed. We ran through past Brisbane City Council through a formal pre-lodgement meeting review. And that was driven by Macquarie town planners, who again are national recognised, but also very locally driven expert in town planning, who have advised us on that side. On top of that, with regards to financiers, we've had development finance partners who are one of the largest finance equity broking firms. They have socialised the deal with a number of the major banks and also private lenders, so that the information that we've been able to gather is based on the credit papers provided to them and discussed with them, and the financiers' feedback of with regards to what they would lend to us at. So this provides us with a long-term, purpose-built co-living provides us with a long-term cash flow investment asset. It achieves commercial returns for prospective development phase direct investors. It also achieves commercial returns for future operational phase investors. It provides development phase direct investors with a very clear and defined exit strategy. and a potential long-term investment fund.
David, before you jump to your next slide, I just want to quickly highlight one or two key important things. If you can just go back to that slide.
Yes, certainly.
Maybe just to the attendees, I think the implication of what David is saying is that leading up to bringing this opportunity, this deal to our community, there was a proper feasibility done, which is bankable from a future development funding perspective. There was a commercial due diligence done and a business case. So just one or two things that I think our community need to understand. Where you talk about an exit strategy, David, 8 different potential exit strategies were considered to get to the most optimal exit strategy that we're going to propose to the community. In terms of the yields and let's call it the revenue model, 4 different combinations were assessed during that DD process. So not only did Highgate and 6C do a proper due diligence, then on top of that, the WealthPoint supply team also did a due diligence. So I think it should give a lot of comfort to our investors that this deal has been thought through, but more importantly, that the business case and the numbers have been stress tested. And then just lastly on this slide, I think the key point that our community need to understand from the financier side, because co-living is a new asset class or a perceived new asset class, we needed to test the appetite of banks to be able and willing to fund the construction phase or a portion of the construction phase, which we got that approval from. So just this whole process just brings a lot of peace of mind to investors in terms of thinking the project through. So thanks for that, David.
No, thanks for that, Rian. They're all valuable points. So the outcomes and recommendations of the business case have been adopted and form the basis of the business plan that is currently being implemented in moving the project forward. The proposed concept that DKO architects have come up with that has been run past and had a pre-lodgement meeting and with Brisbane City Council includes for a 9-level above ground plus 2.5 level basements. It yields 122 micro units or 154 rooms, 84 car parks, 92 bike spaces. There's large communal areas on the ground floor and rooftop, and smaller, more intimate communal space on all other floors. That's probably pretty hard to read on your screen, so I won't spend much time on it. But you can see that the 2 basement levels is obviously parking and services. The ground floor has parking, and there's also we've got co-working facilities in there, and there is also landscaping and external space on the ground floor. We're also looking to have a cafe that services both external and internal. So that is external to the property, so people coming off the street, but also you know, the people who are there have the benefit of that. We then have
just for the attendees, all these floor plans and outlays, they are all available on the platform since the deal is live on the marketplaces. So if we've got an attendee that would like to focus a bit more on this, it is available on the different marketplaces.
So we've then got our typical floors, and the difference between the 2 typical floors is that every second level, we either have a void or we actually have a large outdoor if you like, communal balcony. So whilst each unit doesn't have its own balcony, you get the benefit of having a large external space, which we're looking to have beautifully landscaped as part of what it is. And And then up on the roof, and the units themselves, the majority of them are typically micro studios. The if you like, the pinky coloured ones, they're what we call twins or doubles. They're around about 23 square meters in size. The smaller ones are studios. They're around about 18 to 19 square meters. And all of those have their own cooking facilities and ensuite bathrooms. So they have their own private spaces, but there's also, if people want to entertain, there will be a kitchen and dining facility down on the ground floor, and also barbecue facilities available outside on the ground floor, but also up on the roof area. We're also, we've also budgeted and looking to have a pool area up on the roof, because it is Queensland and it does get warm, so it's always nice to jump into the pool to cool down. At the moment, we're running through a host of scenarios up here. We've got a productive garden, which is, if you like, herbs and vegetable garden, as well as native garden. And we even have, we're looking to have a chicken coop. And this grey area here is photovoltaic cells. And so as Chris had talked through, we've got an extensive photovoltaic cells. So in other words, solar panels, and they supply batteries. And the idea is, to run the communal and as much of the rooms as possible through that. And that's, well, green initiatives. It is intended to achieve, and this has been driven from a number of aspects. I guess it's from ourselves, because we want to, we like to achieve green, and help add to a sustainable world. But also, we see that a portfolio product needs to be as if you like, desirable to the end institutional investor as possible. And with that, it's seen these days that socially and environmentally responsible investment is very much being sought after. It's not just that, it's also our guests are in that age demographic, as Chris mentioned, that they're very focused on climate and the future of the world. So, and on this development, we're really lucky, because the council is also attuned to that. So Brisbane City Council have a green building incentive. So what they're doing is we can get 50% of our developer contributions, and that's a fairly large sum of money. It's hundreds of thousands of dollars that we're able to put into green initiatives that once we meet their, and they've agreed that we meet their requirements, we get that money back via this incentive approach. So the target is to have to create a building that breathes. It's to go as close to carbon neutral certification as we can, and to achieve as high a NABERS star rating, ideally 5-star rating, and NATA's 7-star rating. Measures to achieve this will include, but not be limited to, as I've talked about, solar panels and batteries, LED lights and motion sensors, appliances with 1 star off the best, away from the best available, energy shutdown switches on all units and rooms, air cars to be electric and recharge via solar. The key driver, that said, we don't want to just do this for the sake of doing this. The key driver for achieving sustainability is driven both for the reduction in operating costs and reducing the building and its occupants' impact on climate change. Hence, all sustainability measures are to be tested pragmatically, practically, and on a life cycle costing basis. Because the overall development itself, it isn't just about how much it costs on the capital outlay, it's how much it costs to run, because it's all about an overall cash flow. So where are we now? The project is moving forward. Highgate was appointed in early August to progress the design and manage the preparation and lodgement of the development application for purpose-built co-living, and it's on track with our extensive consultant team to lodge the development application in November of this year. An MOU between Kensington Mortgages and 6C as the local development partner has been signed.
David, if I can also give context, perhaps, in terms of the development application approval, although the zoning is in place, it is just applying for a redevelopment from your typical multifamily residential to co-living. Is that correct?
Yeah, it is a new application, but we've effectively using the outline, or if you like, basically the bulk and scale of what's already been approved there, and we're working with council, and collaborating in all the way with council and bring them along for the journey. So we're trying to, we've established, and we'd like to think that we've got a proactive working environment. And look, we've got a reasonably, or not reasonably, we've got a positive feedback from them so far that in principle agrees with what we're doing. That doesn't give us an approval, but it's an in principle agreement.
Yeah, thank you.
So the project, the investment status. The site is fully owned by existing wealth migrate investors through Kensington Mortgages Proprietary Limited, which is the special purpose vehicle entity. The project costs, the total project cost is $35 million. Funds raised and spent to date is $5.64 million. Total equity required. This has been broken into a number of tranches. We call them tranches, if you like. Think of them as buckets of money that have got to be provided at certain points in time to meet certain criteria. The first one is now, and that's for the DA phase, and that's $900,000. The next one after that is for the residual of the pre-construction phase, which is up until we start construction. And that will be our tranche 3B, and we need that the beginning of 2022, so next year, by the time we get our approval. And then that takes us into our construction phase, which will need the equity for that, which will need to be paid ahead of the bank lenders providing the construction equity, the construction finance at later on in 2022. So the project duration is 16 to 18 months, and the valuation on stabilisation at a forecasted 4.75% cap rate is $46.4 million.
David, if I can just bump in here. So in essence, the project's got 4 phases. So let's call it pre-development, which is this DA approval phase. Then we're sitting with the pre-construction phase. Then we go into construction. Then we go into operations. And once operations achieve stability, that creates the exit for us. Is that correct?
Yes, that's correct.
And in essence, these tranches is just the funding mechanisms for these different phases of the project. And what we are talking about today for investors where the investment opportunity lies is this 900 million, and I just want, 900,000, and I just want to confirm to our attendees, this is Australian dollars. It's not US dollars. So all the numbers we see here is in Australian dollars. And so in essence, we're talking today, and the capital raise is for this 900,000. And it's quite important, as our community know, we like our sponsors to be aligned with investors. And 6C will be contributing 200,000, or almost 22% of this 900,000. And we then need to raise the additional 700,000 through our marketplaces and other relationships as well.
Yep. So thanks for that, Rian. So the project timeline, we're obviously working through the development of approval phase now, and we expect to get a development approval by the second quarter of in 2022, so next year. Construction timeline will start at the end of next year and go through to midway through 2024. The occupancy will commence immediately. That stage will commence immediately thereafter, and the exit strategy we see happening at stabilisation, which we see as about a year is a year later. And that exit, the exit strategy is in two options, and that is sold to market at that time, and that just will depend on the strength of the market and who is in the market at the time. As we said, it is an emerging asset class. The other alternative is, which we see is probably more viable, is to roll it over when the building is fully occupied. So that's to a operational phase investors, which is our tranche 4 investors. At that point, the tranche 3 investors would be fully refunded,
David,
and paid their return.
So the implication here is that we're looking at a 4-year potential exit period if we look at this. And just bringing in what Jason has referred to earlier about talking about the other properties, the other co-living properties. So what 6C brings to the table is that we can put the Brisbane property as part of 6C's other co-living properties, put it into a single portfolio, which will then mean we can sell that off to an institutional investor. And that's where our first exit option comes from. And the second option is, should the market not be conducive for that, we can create another deal on platform where existing investors are bought out and it goes into an income generating deal. So those are the two exit strategies for this deal. David, then just I got a question from an attendant to say, what could go wrong in the DA and or pre-construction phases that could stop the development? If you can just comment on that, please.
Well, like any development project, nothing is 100% certain, but you know, a project, you know, we have a job, and it's all about managing risk. And so it's identifying, managing risk, and that's what we've tried to set up in this process and to work through, and to set up a realistic scale and what we're trying to achieve, and to have communicated with the approval authorities, etc., to be able to reduce that risk. So obviously the risks that are there at the moment is approval risk. You know, there is always a risk that the authorities for some reason will not approve it. I think that's reasonably slim at this stage from what we've looked at, but it is always a real risk.
David, also, maybe if I can just jump in here as well, I think there's two things that I just want to comment on that. So it's very important for the investors to remember that there was already a meeting with the Brisbane City Council where the concept and the design was discussed. And if I understand correctly, the architects already made some changes to the design based on the feedback received from the Brisbane City Council. So I think that's the first thing for me, but more importantly, investors that now contribute towards the 700,000 Aussie dollar investment, they have preferential right behind any funding debt in terms of their capital and in terms of the return. So in other words, basically, the capital and the return of the investors into the 700,000 equity raise is underwritten by the value that sits in the project already, which is a form of security to these investors.
Yeah. So I'll hand over to you on this one, Rian. This slide's really been put together for you.
Yes, thank you very much, David. So to our attendees, so we are looking at a return of equity. So the first thing to understand is, because we're redeveloping, this is a growth-orientated deal and not an income-generating deal. In other words, throughout the period of 4 years, there won't be any cash-on-cash or regular distributions. So the modeling that was done shows a return of equity of about 60% over 4 years, which then means we have a targeted gross, in other words, before platform or marketplace fees, of 15%. So the deal is targeting 15% IRR and the return of equity cumulative of 60% over the 4 years. So as I've mentioned, the deal is live on the different marketplaces. So you can just go and have a look at the net IRR on the deal. But we're targeting 15% per annum IRR over the 4-year deal term or anticipated deal term. Thanks, David.
Yeah, no problem. Okay, so that concludes my talk on the project itself, unless anybody's got any specific questions.
I just want to see, yeah, so we've addressed all the questions that we've received so far. Thanks, David.
Okay, great. So I'll move on to the next topic, which is Brisbane has won the right to host the Olympics for 2032. So this, and the big question, what does this mean for property values and demand in Brisbane? So on July, 21st of July, 2021, Brisbane was named the host of the 35th Olympiad. With this, Brisbane became the 3rd Australian capital to be named a host city, following in the footsteps of Melbourne in 1956 and Sydney in the year 2000. The Games are expected to deliver economic and social benefits of around $8 billion, supporting 91,600 full-time equivalent jobs in Queensland and more than 122,000 nationally. So our Prime Minister made a couple of statements after this was announced, and the first one being, only global cities can secure the Olympic Games. So this is fitting recognition for Brisbane's standing across our region and the world. We know the impact on Sydney more than 2 decades ago was transformative. We can now expect a repeat for Brisbane and communities across Queensland. So, what does this mean for property prices and demand? We can forecast roughly what impacts the Olympics will have on house prices and housing, if you like, demand in Brisbane and surrounding areas by looking to the past. This includes looking at the impact on housing at 3 key events, namely Sydney 2000 Olympics, the Brisbane World Expo in 1988, and the G20 Brisbane Summit in 2014. So, how did the 2000 Olympics impact housing demand? In the decade that followed Sydney being awarded the 2000 Games, the median house price rose more than 40% above the average 10-year house rise. If Brisbane housing market follows a similar trend. The median house price across Greater Brisbane would rise up to over $1.2 million by 2031 from an average of 516,000. So what about the other impacts? So Brisbane has previously hosted significant global events, most notably the World Expo in 1988 and the G20 Summit in 2014. According to PRD research, both events led to a defined increase in property values over more than a decade in the lead up to the events due to the demand on housing, which can be attributed to the spend on infrastructure. So as you can see here, this is a bit harder to see because of the scale of the chart, but the 12-year timeline here, you can see that there's actually a rise. It looks a bit flatter here, but there's a rise in values over that 12 years. So you go from here and you go to that point, there's a significant rise. Similarly, for the G20 Summit, you can see that there's a substantial rise in prices. Other factors. The demand driven by the Olympics will add to the other factors that are within a property market. That is the broader economy at the time, the credit and monetary policy, the local housing supply, political stability, and local economic conditions. As far as credit and monetary policy at the moment, we've got exceedingly low interest rates because of where the pandemic is, and our housing market is going nuts at the moment. With regards to local housing supply, I've pulled these charts off. I've got these charts from an organisation called SQM Research. I put them together yesterday, so it's current as of October 2021, but it really is up to the end of September. So this one here is for Chermside and the 4032 postcode. And the first one is actually residential vacancy rates, which is really important thing to look at. And we're starting off, so if you actually look at the potential impact on whatever comes out of the infrastructure growth from the Olympics, you're starting off on a base vacancy rate of 0.8%. You've also got your weekly listings that are out there, and you can see in these colours, that blue, that extensive amount of blue is listings that are on the market for less than 30 days. So whatever's coming on the market is getting rented out. And because of that demand, you can see that there is an increase in rental prices. That's in Chermside. Over the Brisbane region, this isn't just in the middle of the city. This is over the region of Brisbane. You can see that the vacancy rates and the time frame that's in have been following a similar trajectory. It's currently at about 1.5% vacancy across Brisbane. Similar comment about weekly rental listings. They're getting gobbled up as quickly as they hit the market. And again, that's reflective of the price is starting to rise or is rising on rental listings.
David, then just also for the attendees, so the modelling was done on a 97% occupancy rate, and there's a build-up where we start with 80% occupancy in year one, which build up to 90%, which then build up to 95%. And but I think that the vacancy rate support that targeted occupancy of 97% in terms of the returns and in terms of reaching stabilization during occupancy.
Yeah, look, that 97% is what we've looked at as being an industry achieved rate. But when you actually look at the underlying vacancy factors, you can see that if we're exceedingly proactive and can turn around properties and reduce the amount of downtime in the turnaround of properties, theoretically, at the moment, you could be achieving, you know, a 0.8% vacancy. That's literally just off that. So if you actually look there, that line there is 3% vacancy factor.
And that's why the app that Chris spoke about earlier is so important, because it basically almost creates a stock of new guests moving in when someone moves out and vacate the premise.
Yep, and it's also having an on-site host or concierge who is proactively managing that as well and understands what's going on. So with regards to the rental demand will play well for all forms. So this rental demand will play well for all forms of housing, including co-living. The initial surge of demand for both houses and apartments will be generated through an influx of workers for major infrastructure projects. This was a statement by CoreLogic's head of research, Tim Lawless. The infrastructure build will happen over the decade in the lead up to the Games. You've got $1 billion overhaul of the Gabba Stadium. You've got a cross-river rail terminal and plaza. You've got athletes villages, and you've got major transport infrastructure upgrades, including the Gold Coast and Sunshine Coast motorways and highways, of which Chermside is, has running through it. So it's immediately adjacent to it, and it can host. And if you actually look at it, it's, Chermside and our property is right in the middle of this, and it's within 10 kilometres of this. So the rule of thumb is $1 billion worth of infrastructure spend can lead to a property boom and a rental surge or shortage. Hence, an $8 billion spend, which is what is forecast, is the catalyst for a very large property boom and is likely lead to further rental shortage. So in other words, there's demand for new product. So the 10 days of the Olympics can lead to quite a significant demand in property.
David, so I think for me, a very key takeaway here is that one could ask, sure, the Brisbane Olympics is only, 9 years away. But the key point here is that infrastructure spending and spending around getting the Olympic Games ready build up 9 years or a decade in advance of the Brisbane Olympics, which then means that this property from a timing perspective is ideally positioned to benefit from this build-up in infrastructure spending towards the Brisbane Olympics.
Yeah, no, that's exactly right. So it's all, development is about location and timing. And, the current property market is already good. Adding this to it, the time sits very well for the co-living development, which is going to come online in 2024. And it's going to be able to basically house an potential influx or accommodate an influx of workers in the lead up to the Olympics. So it'll be in place over, because what's that, 2032? So you've got a 8-year window is effectively what it'll be there for.
Wonderful. David,
so that actually concludes our presentation.
Wonderful. Thank you for that. Scott, can I just quickly hand over to you just to show the deal and show how easy it is to invest in the deal, and then we can just conclude. So if the participants, thanks for the time, but I think it will be valuable just to look at it, and Jason, Chris, for yourself, to see how the deal is presented live on platform.
Because I love this part because, you know, I've been investing, sorry, my camera's gone a bit funny there. I've been investing in Australia since 2009. Traditionally, I'd fly all the way to Australia. I'd have to set up a structure and a company and a bank account and everything in between. What I'm basically doing now, and I know we don't have a lot of time, so I'm not going to spend a lot of time, but basically I go into the platform. I literally go into the deal. You can see on the right-hand side, I've got access to all the information that's just been mentioned around the returns and the investment highlights. You've got basically the risk categories, which you can go and read about. You've got all the documentation, which you can download. You've got the different risks. The part I like most is I can literally go in and put in how much money I want to invest, be it 100, be it 1,000, be it 1,000,000. I can see exactly what's happening in terms of the fees and the returns. So there's complete transparency. I can read about everything, the investment summary, the market summary. I can read about 6C. I can read about Highgate and the deal structure. But most importantly, just because it's time, I've watched the webinar for the last hour and a half. I'm very keen to participate. I'm literally going to go from $100 just so that people can see it. I literally decide that I'm going to do it. I read the documentation, obviously. I digitally sign the contract, and basically I agree to make the investment. And what you've just witnessed is me investing in Australia in under 30 seconds. So I now own, and I invested last night, so I've now invested $1,100 in this deal. But you can see now that I own it, and if I want to go in, I can see all the rest of my investments. Finally, the other thing is whether I want to invest my personal name or in my company structure. If I want to go into my wallets and see how my money is, it's all there. But I think, Rion, that's probably enough, because I want to just point out that in 30 seconds, people can now invest in Australia, England, America, Europe, but manage it all in one place safely and simply. And so I'm really excited to be an investor alongside David, Jason, and Chris, having just watched me do it live.
Wonderful. Thank you, Scott. Thanks for that. So, gentlemen, just we would like to thank you for your time. I know we're half an hour over the time, and I assume your late night cup of tea is ready. Thanks once again. It's much appreciated. And to our attendees, I think we've illustrated that we are working with a seasoned sponsor, no nonsense guys, that's going to deliver on a business case that's been thought through. And the deal is live, and you can go and invest immediately on this. So, gentlemen, thank you very much. Scott, Paul, thank you for your time. And we will keep you updated in terms of the success of the capital raise.
Thank you.
Thank you. So for that, then, we're going to finish the webinar, and thank you for your time. Have a marvelous evening, gentlemen.
Thank you. Thank you, attendees.
Thank you.
Thank you. Thanks a lot. Thank you. Bye-bye.